once a month.
Joe Laucher.
Hey! Hello, everybody. Did you ever think voluntarily come to hear somebody talk about insurance? No, not on a nice day like today. Well, I'm gonna be talking mostly about homeowners insurance or residential insurance, and I'm gonna go through an array of issues that we're all dealing with. And as it mentions here, options are limited and expensive, and you probably already know that, so I haven't told you anything yet. So let me just move through. I'll take questions at the end, but if you just have a burning desire to ask a question, we can probably take one in the middle as well. So as was mentioned, Policyholders is a nonprofit. So if somebody charged you to come in and speak to me, they pulled a fast one on you. I'm here just out of our good nature. And I'm going to kind of go through a little bit more about some of the details of how kind of insurance works, our homeowners insurance marketplace, because a lot of folks really don't understand it as well as they may think, or what they read in the news. And I'm going to start here with premiums. Has anybody noticed that premiums are going up a little bit? A little bit. So double digits, sometimes triple for some folks. And so just to give an idea of how insurance premiums work in California for what are called admitted insurers, and we'll kind of get to some of that later, they have to get the Department of Insurance approval in order to increase or decrease their rates, right? So they have to submit data that shows that losses are increasing, so they need to charge higher rates. And just as an example, a couple years ago, State Farm submitted a filing to say they wanted a 20% rate increase. Now, insurers usually go single digit on rate increases, in part because a consumer group can intervene in the process if an insurer asks for 7% rate increase or more, and a consumer group can demand a hearing. And that drags out the process even longer. And it is a long process to review a rate filing. They're like 1,200 pages of data. So insurers don't want to wait any longer than it takes the Department of Insurance to, get through it. But because of the rapid number of increasing catastrophe losses, State Farm kind of decided to go all in and ask for a 20% increase. And it got approved. It didn't even go to hearing. The consumer group, I guess, conceded that it was justified. But just to understand, when you see in the newspaper that, hey, State Farm got a 20% rate increase, that doesn't mean everybody gets a 20% rate increase. It plays out differently for every homeowner. And just as an idea of how that works, in State Farm's example, if you see you can see in their filing the increase amount by zip code. So in this area, you did not so bad, right? 20% overall, but you're 16 or 12. 9.4 for Ladera. Yay, Ladera, only 9.4. But I did do a presentation not too long ago in Ojai. They didn't do quite as well as you did. And again, these are also all averages as well. So this 75% is the average for Ojai, but some people probably got 150% increase, and some might have gotten a 50% increase, right? So, so somebody lucky in Ojai said only 50% instead of 75. So this is the way they play out. State Farm has filed for another 30%. It was kind of moving slowly along. They agreed to make it 22. Then they agreed to make it 17. But a consumer group did get involved in that one and demand a hearing. So it has slowed that down. I'm guessing State Farm will be able to justify the 17 if they thought they could justify, 30. I assume they had, some losses that justified it. So this is the way the market is moving. State Farm is just an example. We were getting these little incremental increases year after year. And, mostly we just grudgingly would, we'd receive our renewal, right? We go, $5,000, put it aside, and then ultimately pay it. Now you're grateful if you get a renewal, right? At any price, right? Oh, only a $5,000 increase, pretty good. So sadly, that is the state of affairs, and it isn't just driven by corporate profits. It is driven by increasing losses in this case, right? And of course, unfortunately, we had a recent good example of how that played out with the fires in Southern California. So again, I mentioned that overall, this was the increase in a zip code. But again, as I said, it's an average, and it plays out differently for every home. Maybe here we are. And these two eyeballs looking at you, strange creature here, is actually, there's a home in the middle of each of those little bullseyes. And it's very likely that those two homes could pay a different premium from each other. So, and actually even one of them, let's say if State Farm is writing them, let's say, they might pay a different premium. Also, one might be ineligible for coverage while the other is eligible, even though it's on the same block. And you go, well, how's that possible? That didn't happen a couple decades ago. That never would have happened. But today, insurers are using models that give a score to each and every home based on the slope, the fuel that is nearby, either brush or forest, and the access, like how readily can firefighting equipment get to that home. And even though these may be a block away from each other, they might have a slightly different score. And that score probably means the one that's a little higher up the hill might pay a little more. Or it could be that the home that's just one block higher up the hill isn't eligible for coverage anymore. That the insurer has put a cutoff, maybe to a score of 15, and that one that's a block away is a 16. And it would have qualified under the old guidelines, but the insurer has adjusted its eligibility standards to tighten them up, and it no longer is eligible. So when you hear people say, well, my neighbor still got renewed and I didn't, and it can be for something as tiny of a difference between homes as that, right? Same block, little different location. And so that's based on these modeled scoring devices that pretty much all homeowners insurers now use. And that was all based on satellite imagery, but now insurers have stepped up their game to use aerial imagery as well when they do their scoring. So that's also playing into both your rate and whether you're eligible for coverage. So you saw those two bullseyes, but you couldn't see much detail about the home in each. That's kind of to reflect the satellite imagery. With aerial imagery, the insurer is getting a lot more detail about each home. And what do we see happening here? For this home, you have tree limbs projecting out over the roof line. So for insurers, this is another no-no that they might have not noticed, even though they've been writing you for decades, because insurers typically do not go out and inspect homes anymore. It's something they might have done decades ago, but it's pretty rare for them to send someone out, too expensive, and they have these other tools. But now they're able to get a lot of information about this property just from a satellite imagery scoring vendor. And if this is your home, you have the chance of either being told you're going to need to remove those tree limbs if you want to be renewed, or you might just get non-renewed. So This is a reason in today's homeowners market, you have to be very proactive. Now, insurers can also have different standards for how to handle this. Some insurers may say, okay, I can see from above there's a tree limb there. If that tree limb, if you raise that up so it's at least, let's say, 10 feet above the roof, then we'll still write you. And some may say, no, it can't project over the roof at all, right? So limbing up with some insurers will do the trick. With others, they say, no, as long as there is a foliage reaching out over your roof line that's going to fall on your roof. If it catches on fire, we don't want to write you. Sometimes that's not even within your control, right? This tree may actually have its trunk in your neighbor's yard. And so you're at the mercy of your neighbor, or you can slice off half their tree, that's over your property line and see how that goes. But so this is kind of where things are going. And their databases are growing as well in terms of other details about the home. So what they have, for example, now is the date this home was built in their database. And let's say this is a 1960s home. They will know what the building codes were in 1960. So in 1960, the building codes did not require ember-resistant vents, right? They had we have a pretty large size scale mesh around most of our 60s vents. And the issue is embers can penetrate those. So in newer construction, maybe the last 10 years, that's a much tighter kind of mesh that goes over vents, and it doesn't allow ember penetration. So insurers are going to ask, if you have a 1960s home, have you replaced the vents? And if you haven't, you may get non-renewed. So, there's just a lot more underwriting going on because things that they didn't worry about so much for the last few decades all of a sudden have become very important to them. And they're looking for kind of, we'll say, objective ways to reduce their concentration of risk. So you may have noticed, you might not know, but there used to be many more insurers that were writing homeowners insurance broadly in California, but there's become a lot more concentration in those big name insurers, the ones we've all heard, State Farm, Allstate, Farmers. So they've written a lot of business, and they've bought up a lot of the competition, companies Unigard and Continental, or Fireman's Fund maybe is one we know around here. Those books of business have been absorbed by bigger carriers. They all wanted to write more and more and more, and now they're rethinking that. Now they want to write a little less, and we're kind of caught in that process. There aren't as many insurers competing for our business, and the ones that have it are kind of reducing their book. So what can you do? Well, there is a set of mitigation actions, including a Firewise community. Has anybody thought of having one of those around here? We haven't. Let's see. So including being a Firewise community, there is a set of mitigation actions, and this is on the Department of Insurance website as well. Every admitted insurer, and we'll get to that in a bit, has to offer you a discount for each one of these actions, including being a Firewise community. The FAIR plan offers these discounts too, but you have to do all the building ones to get a building discount and all the landscape ones to get the landscape discount. But again, all admitted insurers give these discounts. Compared to the rate increases they're taking, the discounts are pretty tiny, I will say. But over time, we're hoping they don't really have data to necessarily support the difference of giving these a discount, but over time that database will build, and it'll prove out how valid or how useful it is to have done each of these discounts. But it is one way, at least, we can take some control over our, situation risk-wise. And I will say some of them are a little less expensive potentially to do. The fire-resistant vents, my particular fire chief said, well, that's something you can just do yourself, and by putting the smaller mesh on your vents. And I was kind of skeptical of that, but even though I'm pretty inept at anything involving construction, or I did pull out vents. I bought a roll of mesh, metal mesh, and some snippers, and I wrapped those vents with that mesh, and I shoved it back in, and I have done my vents for like $80. Now, my chief had also said, well, nobody looks at your vents and cares what they look at like. And I was thinking, that's not true. People look, and I don't notice now that it's there. Maybe because it's my ugly handiwork that I'm forgiving of it. But there are some things you can do, clearing of vegetation and debris. Hopefully you can do that or have somebody do that. The key is to do the ones you can. And because your insurer is giving you a discount for each one of them, do the one that's easiest or cheapest and start there. And it's one of those, don't let perfect be the enemy of your vents that look ugly. Just go ahead and do what you can or what you can afford to do. Non-admitted insurers don't offer those discounts, I'll say, if some of you are there. And it gets us to this topic of non-renewals, or the notice that you get from an insurer. If they decide they're going to non-renew you, they have to send a 75-day notice. California is fortunate that we give or mandate about the longest time frame of notice than any other state. They have to give you the very specific reason why you are being non-renewed. Sometimes that's something within your control. For example, if you have a wood shake roof and you haven't already been non-renewed, that is a likely target for a non-renewal. You have those 75 days, so maybe you're able to get a contractor out and replace it with a Class A roof, in which case you would contact your insurer right away and say, the reason for the non-renewal is no longer valid, you should renew me. It doesn't always happen, and you should call the Department of Insurance if they don't do that. But if you are able to resolve the issue that's stated in the notice, they should renew you. The issue for most homeowners is there isn't any control over that issue. So if they are saying we're no longer writing at this wildfire risk score, you may not be able to do a thing about that, right? Or if they're saying we no longer write homes that are older than 50 years old, and you have an 80-year-old home, you can't do anything about it. So it is just to deal with what you can. And, if you really think that you are not going to be able to salvage that renewal, you need to get shopping for coverage right away. Again, we like to not think about insurance that much. You get that non-renewal notice. You're just going to kind of stew on it a little bit. You don't have time to do that. You need to start contacting agents. Well, starting with your current agent. What are the common reasons for non-renewal? Well, you probably guess. Wildfire risk is a major reason. Sometimes it's the age of the home, and sometimes it's components of the home that are driving that. Age of the roof is a big one. A lot of people have a perfectly serviceable roof that's 22 years old, and the insurer says, well, we won't write homes over 20 years old. Sometimes they'll let you submit something from a roofer that tells you that says that this home is, or this roof is in perfectly good condition for another 10 years, and insurer will say, okay. And sometimes they'll say, we don't care, it's 22 years old, and we write up to 20 years old now. So, you know, galvanized pipes is sometimes an issue. A lot of our homes have galvanized pipes, but you know, some insurers are choosing, because they're kind of, some of those are hitting their kind of lifespan.
What's the hazard of
Pipes can burst, they get rust, and
water damage.
Water damage.
Okay.
Yeah, so it's not all about fire. But you know, there are other issues. So galvanized pipes is one of them. They particularly, some of them particularly do not like washer dryers, for example, upstairs, because you know, if your washer has an issue, it dumps on the roof of the first floor. And so that's why they're kind of more concerned about two-story homes with plumbing issues than one-story homes. Does more damage. Knob and tube wiring, that's one for Victorians, and you probably don't have a lot of those right around here.
We did.
You did, yeah, that's true. Pools, trampolines, these are issues because of liability issues. So again, things they might not have really cared about years ago when they wrote your home. Now they're looking for any kind of logical, objective reason to non-renew one home versus another. So some of these liability hazards also play into who gets to be renewed and who doesn't. So again, you want to really know what your rights are. I mentioned, number one, they give you the 75 days notice. They need to give you information about your risk score. They need to tell you specific information about any non-renewal notice. If there's any of those things you can address, you want to make sure that you do that right away. And if you are getting a "we don't care" response, you need to be contacting the Department of Insurance right away. Once a bad deed is done, sometimes the insurer just takes the penalty from the Department of Insurance rather than correcting the issue. Like, okay, well, you have a violation, that's a $5,000 fine. They go, okay. But generally, the department doesn't do a lot of fines, I will say. So, you know, the insurers take their chances. But you really have to get on this stuff, even though we don't like dealing with insurance. Unfortunately, we're in a world where you can't ignore the issue. And if you get one of those non-renewal notices, like I mentioned, you're going to want to start shopping for new coverage right away. And given how difficult it is to find an insurer that's writing new business, this kind of means scouring the market for, you know, someone that maybe has a market. Any one insurance agent, independent agent, probably represents 6 or 7 companies. And there are like 70 companies out there that write homeowners insurance, right? So State Farm agent typically doesn't represent anybody but State Farm. So if State Farm won't write, they might offer to put you in a fair plan or non-admitted carrier. You want to do everything you can to find another admitted insurer. And so one of the ways to do that, they're on the Department of Insurance website. There's a top 10 tips for finding residential insurance. That includes things like, let's see, like the 800 number of every admitted carrier that's writing coverage. So you might not have heard of Trumbull Insurance Company or Wawanesa or Amica Mutual, or, you know, there's just a lot of small companies, Tokyo Marine, that you may not have heard of. And so you shouldn't concede that no one will write me until you kind of do a little, put up a bit of a fight. You can call their 800 number, which was on, you know, you get to this from that top 10 list, and say, can you write my coverage, or can you, refer me to one of your agents so I can see and, get some information from them. In today's market, if you have a high-risk property, this is probably a huge wild goose chase to do. But, given the fact that you could have thousands of dollars that you could save, I think it's worth the effort. I mean, I know personally that some of you are sitting around listening to a boring guy talk when you could have been calling these numbers. So, you know, you have a little time, so spend it doing that, and it might be totally worth it, right? Maybe, you know, it's just a total waste, but, you know, you want to do all you can to avoid being in the FAIR plan, which probably just that policy costs as much as your homeowner's policy and has way less coverage, right? You're going to have to, I'll talk about it in a minute. So another thing, given that premiums are going up, one thing we are telling people, do as much mitigation as you can, right? Get as many of those discounts as you possibly can. Bundle your home and auto, you know, every commercial will tell you to do that, but it does make a big, it can make a big difference. You know, I had an auto insurer that was much cheaper than my homeowner's insurance auto coverage. So I stayed with this auto carrier. But now getting the discount on the home may be more, for having the bundle, may be more valuable to me than that differential in premium between, you know, the home insurer's auto coverage and my cheaper auto insurer. So it's worth seeing if you can bundle it. But another important thing to do is raise your deductible. So old guy like me, when I bought my home and bought insurance, and I chose a deductible that was a lot of money, $500 deductible. I wouldn't want to handle that kind of loss, right? And I renewed as is year after year after year, and 20 years later, I still have a $500 deductible. And it's like, you want to look at that deductible again, because maybe you can handle a little more than the $500. You don't want to be submitting a $550 claim anyway, right? And sticking your head above the water with the insurer. So raise it to a level, if you can afford a $5,000 loss yourself or $10,000, then raise your deductible to a level that you can comfortably suffer the loss without using your insurance company, right? So it's just, you don't want to make small claims with your insurer, not because they're going to necessarily cancel you because of the claim, but because in the investigation of the claim, well, how did that person get in your home? Or, you know, who knows what comes up? And so you just don't need that kind of attention, I would say. So raise your deductible. So something above $500 is my recommendation. So just quickly talk about the types of insurance companies. State Farms and Allstates, those are all the ones we're familiar with are typically admitted insurers. And what that means that their rates are regulated by the Department of Insurance, but even more importantly, that they are backed by a guarantee fund that if they were to go insolvent, their claims would still be paid. So in the Camp Fire up in Paradise, a small insurer, I think it was Merced Property Casualty, went bankrupt. They wrote more business than they should have in a very small at-risk community. So they went bankrupt, and because they were an admitted carrier, all the other admitted carriers paid off the losses through that guarantee association. So that is a great insurance policy for every homeowner who is with an admitted carrier, right? They're not going to go insolvent and leave you with some major loss and no compensation for it. Different story for a non-admitted company, it's called, or surplus lines, or excess carrier. There are a whole bunch of terms for them. And you can see which ones are admitted on that 800 numbered list that I pointed out earlier. But there are a lot of non-admitted carriers that are writing more business today than ever. They're really not intended to write business that the admitted market will write, but the admitted market is contracting, and this group is picking up a lot of that slack, which is okay. It's good there's somebody, but they are not financially guaranteed to pay your claims. So if you do end up with a surplus lines carrier, you are going to want to check out what their financial rating is. There's something called a BEST rating. So that's kind of the best known financial source of rating companies. You probably, if you are in this market, you want to make sure the company that's insuring your home is probably at least a B plus. You know, obviously you'd prefer an A, and you only want a B plus if you can't find someone else. But you have to check their financial rating, and there's no guarantee even then, but at least, you know, your chances are much better. There's the FAIR plan. That only goes up to a certain limit that they write. Maybe it's $3 million or something for a home. We are very lucky to have a FAIR plan in California. Not every state does. Colorado just had some massive wildfires. They don't have a FAIR plan, so they're creating one. Some other states are going to have to create them as well as we go forward, and insurers are kind of contracting everywhere in coverage. So you have the FAIR plan, only writes up to a certain limit. It's very pricey. And then you have this thing is a forced place. That's just, if you have a mortgage, your mortgage carrier probably has a component in the contract of that loan that you will maintain insurance on your home. And they get a copy of your insurance policy, right? You name your lender on your home insurance policy. So when they don't get that renewal, they are going to ask you, have you replaced your coverage elsewhere? And you're going to need to have done that. If you haven't, they are going to place coverage themselves just to cover the loan amount, right? You will pay for it, but you will not benefit from it. So lender-placed coverage is something you would pay for, but if your home burned down, it wouldn't rebuild your home. It would just pay off your mortgage, essentially. So don't count on that as your primary coverage. I'm getting very technical, way too much. Let's see if I change my tune here. Nope, still technical. Everything about insurance is technical, I think. So if you do end up in the FAIR plan, do understand that it is basically a fire policy. Fire, explosion, windstorm has that. But its essential catastrophe coverage is fire. You have a lot of other exposures. So it's very pricey, but just fire. Water damage is the second most common property loss, right? I mentioned pipe burst, something like that. Rainstorm comes in, you know, through the roof, through the window, whatever. So you want water damage coverage. Theft. Liability is a very rare loss, but it can be a very pricey one, right? Somebody trips and falls and injures themselves on your property, sues you, you're going to want liability coverage. You know, you may never need it, and you probably never will in your life, but if you do, you will wish you had the coverage. So if you end up with the FAIR plan, you have to buy what's called a difference in condition policy. Some people call it a wraparound to provide these other coverages, and they equate to something pretty much identical to a homeowner's policy. But you definitely just don't want to end up with FAIR plan only. And as I mentioned before, you want to do everything you can not to be in the FAIR plan. And this is one of the reasons. Because the FAIR plan is fire only, you're still going to have to buy another policy. And you'd just be so much better off with a combined, you know, a homeowner's policy. Okay, underinsurance. So this issue comes up after every, I'll say after every, not almost, after every catastrophic event. Many people, typically I'll say the majority of people who have had a major loss are also significantly underinsured. So, meaning they don't have enough money in their limit to rebuild their home as it was. So this occurs, I don't know why it continues to be there, even though your insurer has a responsibility to send you an estimate of the cost to rebuild every other year. You will generally find that it looks like well reasoned, because they give you some of the details of how they came up with it, it's not enough. Part of it is the surge in construction costs after a catastrophe. I'll get to your question just a second. So, obviously prices rise when you need contractors after a wildfire loss, but even on a one-off loss, often our homeowners' limits are not enough. So you want to at least get some idea of what it costs to build a home in your vicinity, and at least get your limit to something in the range of reasonable. If you're in Ojai and your premium just went up 65%, you're probably not looking to drive up that premium a lot more by raising your limit. But you do want to have coverage that gets you in the ballpark, right? So, if your home's, they're coming in at $400 a square foot, and it should be at least $700 a square foot, maybe you're willing to get it to $500. You might have to give some evidence to your insurer of how you've come up with that number, some detail from a contractor about, well, this and this and this is my estimate. You can't just say, oh, I want a higher limit, and you can't just say, I'd like a lower limit, right? My premium's gone up a lot. I'd like to lower my limit to lower my premium. That doesn't work. So try to avoid being underinsured, at least as best you are willing to afford.
Are there any tools that is at our disposal to figure out that figure for locality? For each homeowner to individually try to figure that out?
Yeah, it's. I would say, I don't know of any. There are some. Sites that you can go to and get an idea. The best way is really if there's any home being built nearby that's similar to your neighborhood, see if there's any way to find out what the cost is. Most of us are in neighborhoods where there is no new building going on, so it's kind of rough. So I don't know where you find that information, but I think you'll find if you, we'll say AI, your location, you'll probably get something in a ballpark. But of course, one-off homes can vary greatly, one from the next, depending on finishes. So it's pretty hard, but you might be able to, I'll just say, you might be able to find a contractor that say, well, the minimum around here is $600 square foot.
There was a inquiry on the listserv last week.
Yeah, I saw that.
People what?
I didn't see any results.
Right, but you didn't contact them.
Okay.
So, so there's that. The other thing we recommend that people do is inventory your personal property. Just so you know, to put a personal property claim in if you have a loss, you have to write down. So if you had a one-off, your house burns down, which it never will, but it might. To get your contents claim paid, you have to list every single thing you own, when you bought it, how much you paid, what condition it's in, and then the insurer will give you the depreciated value of that item, so that you get this, all right, this table, $10. Then you have to go buy a new one and then submit to get the replacement cost. If you buy a like-kind table, it is quite a burdensome process. So you're getting actual cash value first, and then you get replacement value when you replace it. So you can potentially avoid all that by having some evidence that I did own this stuff, and you can see, that I'm not making stuff up. And one easy way to at least help you have that opportunity is to walk through your home with your phone and do a video of everything in all your drawers, your cabinets, your closets. If nothing else, it reminds you of all the things you owned when you do have to if you ever have to make a claim, which I hope none of you ever will. But this is just a reality of the claims process. It gets a little easier when there is a catastrophic loss. There's typically a waiver that insurers will pay out a certain percentage of the contents, but even then, currently, they wouldn't pay out your total contents. And so if they gave you half your contents limit, you'd still have to buy or prove everything you had to get above that limit. So you'd have to document, everything up to the 100,000 or 500,000 they gave you, and then keep going to get any more. So you'd like to avoid that. This gives you a chance of proving, look, you can tell this is my house, and you can tell I owned all this stuff, valuable. Did I almost say bad? But I owned all this, so can we, skip the process? Some insurers will, because it does save them time as well, right? The claims process is a burden for everybody to negotiate. And I'm almost there, so you guys are doing a good job of sitting still through this is quite a test. The insurance department has kind of moved forward with an initiative that the commissioner calls the Sustainable Insurance Strategy. And it basically is a way to align how insurers compile their rates with the way they pretty much do it in every state. And that means that they are going to use catastrophe models. So there are actuarial firms that look at the insurer's book of business. You write a lot of business here, a lot there. This is what we project your future wildfire risk will be. So you can load that into your projected losses in your rate making. And also insurers go and buy insurance themselves from maybe like Munich Reinsurance to cap their total losses from any one event. So they may say, I don't want to lose more than 500 million in any one wildfire. So they'll buy a coverage above 500 million. Well, they didn't used to get to pass that cost, their insurance, on to you, and now they will get to. So these add up to you paying more. This is what's going to happen. So if you thought those double digits were the end of it, there's more coming. And the idea is that once insurers, they are saying once they're allowed to do these things, they're going to start writing more business again, right? So maybe hoping to depopulate the FAIR plan and write some business that they have been non-renewing and to stop non-renewing. So good news, more availability. Bad news, less affordability. So always one of those teeter-totters. It's never just outright good news in insurance world.
But it's still better than going through FAIR plus.
Still better to be with an admitted carrier than FAIR. And the FAIR plan, I think they do pass through some reinsurance costs, not much because they are actually FAIR plan's backed by all the admitted insurers, so they have to pitch in. But the FAIR plan already does use wildfire risk models to project their future losses. So they've had that advantage. But yeah, it's good to be out of the FAIR plan. And you've been kind enough to listen to me all this time. I would welcome if you would come take our home survey. We're just trying to create more data about what's going on, people's experiences with homeowners insurance in California. It helps us when we testify on behalf of legislation or come up with new concepts ourselves that we recommend. We like to have the voice of the people behind us. uphelp.org. You know our standard admission price because you just paid it today. Being able to sit still through an insurance presentation. So check us out. We have a lot of information. If you know people in Southern California whose homes burned down, there is a lot of information there to help people work through the claims process, which has kind of been our priority all through the many years of our existence. So refer people to that. but we're also very engaged in availability and affordability issues as well. And maybe if you're lucky, that seems to be the last slide. Yay for you. If anybody has a question, you had a question?
It's more of a comment. I think you have to really be looking at your premium renewal every year, because a couple of years ago, I saw on it that our house was built in 1956 and was wood.
Right.
Well, it can't change the age of the house, but we had remodeled, and probably 80% of it is now stucco, with a remainder being board and batten. I was just talking to the guy out there about replacing that with hardy board.
Yes.
So anyway,
Yeah.
I'm sure it may have adjusted something in that premium, not a whole lot, because it keeps going up, so it's hard to
Right.
track.
It is.
But you do have to watch those details and get in charge with your agent, get in touch with your agent and say, look, this is the way our house is now. I mean, and since then, we've installed the water flow meter, and I think that will help.
It can.
So,
It'll help you not get non-renewed for some carriers at the very least.
yeah, ours, it's probably not a non-renewal issue.
Yeah.
It's very good about doing
That's good.
and raising the prices.
Well, that is good. You do have to, back to my point of like sticking your policy aside, not looking at it and just grudgingly paying the bill. You do want to look at, is the coverage right? Do they have the details of my home right? That is very important.
Something that's just suddenly appeared.
Yeah.
You know, it was never on previous
Yeah.
premium renewals, but all of a sudden, you know, the age of the house was being called out.
Oh, very nice. Yes.
Could you tell us a little bit about your organization, the United Policyholders? You mentioned that you do some legislative advocacy. You do litigation, advocate for climate change, other things like that.
I don't think we're involved in any litigation. So I've only been with United Policyholders since I retired. But the main work has always been around claims issues and related legislation, some of which we suggest by just because when you're working through the claims process, you see where the hiccups are. So I don't think we do anything really related to climate risk. A lot of it, like the couple times I've testified recently, some of it is about like the aerial imagery, about sharing details of it with the consumer and allowing a rebuttal. Because I will say aerial imagery has turned into a big issue of insurers maybe identify mold on your roof and then they're going to non-renew you, but it turns out they're solar panels, right? And or they catch your neighbor's roof and not yours. And so there has been issues, particularly in places where they don't give you much notice or detail. That's been where most of things have been about claims and coverage issues, I'd say. And it's yeah.
So you wouldn't be open to doing class actions on behalf of policyholders?
We have, I think some of our sponsors are litigation firms that deal with some of this stuff. So we don't do that. We are like a dozen people. And mostly, like we send people out. Now I have, since when I've been with United Policyholders, I've been sent out to Santa Cruz, for example, after the CZU fire to take people coming in with insurance issues about their claim or their renewal, that type of stuff. So we usually are sending our small bit of staff to events like that and taking past people who we've assisted over the years to join us. One of our lead people right now is from the Santa Rosa fires. She's been in Southern California for like a month at a time with other people who we've helped from past fires to help people go through the whole claims issue.
Do you overlap with what FEMA does, if FEMA's ever going to do it again?
No, FEMA is an insurer essentially, right?
But they help with the process?
FEMA can help people through a claims process a bit, but it's about their coverage. So FEMA will be at these events too, but kind of navigating your claim, and and a good adjuster would help you as well from an insurer, but they tend in catastrophe events to be overworked themselves. And sometimes they're just trying to keep it to a minimum, right? They're not trying to help you maximize your claim necessarily. Not that they all are bad people or anything, but so that's been our focus. This has just turned up as one of our priorities because the same places that are having these losses are also the ones having the non-renewals, right? If you go to a forested place that's had a wildfire event, they are also now having insurance availability issues and beyond, right? Even now anywhere that's wooded and slope is having an issue. And, places, you go into places and you realize we weren't really set up for this kind of risk. And I grew up in Los Gatos, and I was recently sent to this little community called Chemaquita Park. And as you go over Highway 17 towards Santa Cruz, there's a reservoir, Lexington. You go past that and you go down this road, and there's a little community built in this little warren of streets in the forest, and it is bucolic and wonderful if you look at it under the 1960s lens. But if you look at it under the 2020 lens, you say, you never should have built here, right? In these little narrow streets, that a fire truck will never get down, but hey, things have changed, and you can't undo everything from the way it was, right? We have a built environment, so you can only do the best you can, and that's back to doing a Firewise community, doing the mitigations, the things you do control. So, sorry, 2 questions at least, the one? Yeah, I personally don't believe that insurers respond by, oh, what? You raised your hand? I'm going to non-renew you. I think you should be telling your agent, right, we've redone this, we've redone the plumbing, we've replaced our roof, whatever you did, or a contractor, we got this from a contractor saying it would cost this per square foot to rebuild the home. They are not, to my understanding, going after people for these things. These decisions are made way more broadly looking at a book of business and not on people raising their deductible or telling them that they've changed their, some of the, wood to stucco. That doesn't trigger anything to me. That's it. I'd be proactive. And yes.
So one, concerning the insurance, has anyone thought to say, okay, wildfires are now part of our new product?
Oh, and wind losses. Yes.
The insurance companies weren't set up to do this. So why don't we release them from doing wildfires themselves and just keep them to fires within my own home and remove the insurance companies from some of this? Not that we shouldn't be doing all the fire prevention stuff, but it seems unreasonable to say, oh, the insurance companies are going to cover wildfire. They're not going to be able to cover earthquakes. And we deal with that.
Right, we have an earthquake authority. Well,
We say, I'm not getting earthquake insurance.
yes, you can make that choice. Yes, and most people don't have earthquake insurance. And any given day may be the day you regret that. But I have it because I've been in insurance forever. I would say in California, we really do not want to parse out fire from wildfire, for one thing. Like then you have to decide, well, what is it? 10 homes, 50 homes, 500 homes. But we already have a means of parsing it out. Like if you don't want to write wildfire in an area, you can offer a DIC and reject the homeowner's policy. And we have the FAIR plan, which again, most states don't have.
My second question is,
Yes.
the insurance companies pressuring the state and pressuring PG&E to say, for PG&E to guarantee its stockholders 10% or 12% or whatever garbage they're asking for now, the governor should say, you get 5% period, and the rest of whatever you figure is that dividend should go to repairing the damages, repairing the lines and everything that have caused deaths by your company in California. And that, to me, at least would make us a heck of a lot safer than sitting around and waiting for them to do it, because they're not doing it.
Well, I would say this about PG&E. I think they run on a shoestring budget. I think their CEO only makes about $50 million a year. And so I don't.
Tight, I know.
It is. Times are tight.
The new one gets that same amount, but the other one walks off with the same salary.
Yeah, I do.
Their latest thing was to push the PUC to guarantee another percent to their dividends. Which
Yeah.
is-
Yeah. I will say this. So, and we're wrapping up, I take it. Okay, I'll say this. There have been, I think the campfire was one that I mentioned, where PG&E did spark and did do a $80 million, I think, payout to the insurers for their costs, besides reimbursing things. And I think we've all seen the PG&E commercials now that talking to an individual, and we've really changed things because we've underground 80 miles of our 500,000 miles of lines. So there's that. But I agree with you, PG&E is an issue.
But more than just the people saying it, we need the insurance companies, we need fire departments, we need everybody else pressuring the governor, whoever it is,
Right.
to control them, because the PUC is theirs.
It appears. I think they did turn down one of their increases just 20 years ago.
Okay, we're a little bit over here.
Yes, okay.
Thank you, Joe.
Yay.